We'll open the hearing on Senate Bill 320. Amelia, do you mind?
Good morning, Madam Chair, members of the committee. Senate Bill number 320 relates to property taxation and would expand the exemption eligibility for commercial and industrial machinery and equipment to include that equipment that was acquired or transported into this state on or before June 30 of 2006. The bill would amend a current statute 79-223 to include a property tax exemption for commercial and industrial machinery and equipment acquired by qualified purchase or lease made or entered into on or before June 30 of 2006, or transported into this state on or before June 30, 2006 for the purpose of expanding an existing business or creation of a new business. The exemption would take effect with tax year 2026, and the bill would take effect from and after publication in the statute book, and I would be happy to stand for questions.
Seeing no questions, thank you, Amelia. First up is Darren Miller. Welcome to the Tax Committee.
I'm Darren Miller, Vice President for AT&T in Kansas. I'll be short with my testimony. Thanks for allowing me to be here today. We support this bill. Yeah, move it up some more, yeah. Yeah, I tried to slouch to get to it. We support this bill. We think it's good legislation. We do ask for an amendment. 79-223 is for locally assessed. Which we support, and there's this what I call a sister statute, 79-224, that includes centrally assessed. So the reason we need that is centrally assessed is a lot of my old cable, and by amending that, it keeps me competitive neutral with cable, which falls under locally assessed on 79-223. So with that, I'll stand for questions.
Thank you, Darren. Committee, any questions? Seeing none. Oh, Senator Francisco.
Thank you, Madam Chair. And this is a question I have for probably all the proponents, but they talk about equipment that was transported before the June 30th, 2006 for the purpose of expanding an existing business or creation of a new business. So how do we differentiate between equipment was there or expansion?
Would you mind if I have my property tax director help answer this question?
That'd be fine.
Is that okay?
Yes.
This is John Hughes. He actually covers multiple states for us. We're just fortunate. He's from Kansas and lives here.
Great. You introduce yourself and welcome to the committee.
My name's John Hughes. I'm Director of Property Tax. I'm the Director of Property Tax. I actually worked for property valuation back when this legislation was passed originally. The purpose of what you're speaking about in the legislation was to keep people from moving the property to avoid taxation at the time. They were worried that what would happen is somebody would go merge next year and have it reacquired, and it would be after the date, and then it wouldn't be taxed anymore. And so they put this legislation in, the stipulations, so you couldn't move it to then have it be exempt, even though it was originally acquired prior to 2006. That was the reasoning for the language. And so what they're trying to do now is to make all that prior equipment exempt also.
Senator Francisco.
Thank you. I understand that. So I was just surprised that the new language, if I'm reading this correctly, also says for the purpose of expanding an existing business or creation of a new business.
Yeah, I think all they did was just copy what was there before. They could have eliminated all of it and just changed the dates if they wanted to do it that way. They just left it in and just added the date as of before. You could do it either way.
Thank you, Madam Chair. I think if we took that out, it would eliminate some confusion about what the purpose was 20 years ago.
Thank you.
Is Sean Robertson. Sean, thank you. And I've got to tell you, the county, the reason that we have this legislation before us, I was very happy. My hairdresser is happy. She's been very patient on this for a few years, but the County Appraisers Association reached out, and I was excited to see that. So thank you.
Yeah, thank you, Madam Chair, Committee. Sean Robertson, Saline County Appraiser and representative of the County Appraisers Association. Happy to be here in support of Senate Bill 320. Back in 2006, now 20 years ago, commercial industrial machinery and equipment that was newly acquired or newly brought into the state is exempt from property taxes, as Amelia will let you know. At that time, it was not an unreasonable economic development tool in getting businesses to purchase new machinery, equipment, or incentivizing businesses to come to the state. However, that created three problems. Number one was a shift of a tax burden. That happens with exemptions sometimes. Number two, it has created a legal fight in the courts about what portions of a property are personal versus real, with grain elevators and ethanol plants and hotels. The toothpaste is out of the tube on that one, so we aren't going to revisit that part of it. However, the third one, it's created a horrible inequity where new commercial machinery equipment is exempt and the older stuff is taxed. I'll give you a real-world example. A friend of mine in the city of Salina owns 4 or 5 convenience stores. The coolers where the beverages sit are commercial machinery and equipment. He had owned those for years, sold one of his convenience stores with everything included. Those coolers were taxable to him, and once he sold them, they are exempt to the new owner. So you have the exact same piece of equipment sitting in the exact same spot that's taxable to one owner and exempt for the other. And this is this bill can take care of that inequity and unfairness. So be happy to stand for any questions.
Thank you, Sean. Senator Francisco.
Thank you, Madam Chair. I'll ask my same question. Do you think that there's any reason to include the purpose for this machinery, or are we just talking about exempting all industrial machinery and equipment?
Essentially, we're talking about exempting it all. I think you could make the logical argument that any purchase of new equipment is an expansion of the business. So I think it's semantics.
Thank you. We were talking about what the purpose was in 2006. That's why it's harder for me to understand. Thank you.
Any other questions, committee? Seeing none, thank you, Sean. And thank you for bringing this to us. So next up is Eric Stafford. Eric, I'm glad you changed your position on this legislation. I've tried to bring this bill 3 or 4 times.
Good morning, Senator, and good morning, committee. Good to see everybody. Yeah, we appreciate this bill coming forward. There's a similar bill in the House. It does the same thing. The language is just a little bit different, right? But we're happy to testify in support of it. Actually got a phone call from one of our members who, we submit our weekly newsletter and talk about bill introductions and bill hearings and all that stuff, and called and said, man, I didn't even know this was under consideration. And obviously, the dollar impact is important for the pre-2006 equipment that could still be in operation, but there's an administrative component too for businesses where they're having to track the different equipment, and for tax purposes that they're having to kind of dual maintain. So it takes time to separate everything out from a property tax perspective. So I think there's more value to this on the administrative side, just as well as the dollar side. So yeah, pleased to speak in support. Darren spoke about the second statute, which we wanted to make sure we highlighted as well, and 79-224 as well, just to equalize the treatment. But yeah, do appreciate this legislation, and thank you for bringing it, Senator, and happy to support. So be happy to answer any questions.
Thank you, Eric, and appreciate you and your work. Committee, any questions? Seeing none, thank you.
Thank you.
Written testimony, committee, I'll turn your attention to it. Is there any other proponents? Any opponents? We do have written neutral testimony from Spencer Duncan. Committee, I'm going to close the hearing on Senate Bill 320, open the hearing on Senate Bill 378. Amelia, will you give us an overview?
Madam Chair, members of the committee, Senate Bill number 378 relates to property taxation and would provide a one-time non-refundable vehicle registration property tax credit for eligible vehicles. The bill would establish a one-time non-refundable vehicle registration property tax credit in an amount of $250 per vehicle as defined in subsection E of the bill. The credit would be applied as a credit against the property tax levied upon such vehicles at the time of registration, registration renewal, or at the time of payment of personal property taxes in December. This would only occur during fiscal year 2027, which would run from July 1st of 2026 through June 30th of 2027. Eligible vehicles you can find on page 2. They would include buses, motorcycles, passenger vehicles, recreational vehicles, trailers, and trucks, as those are taxed as provided under subsection E. And specifically, we're talking about, when you look at that provision in subsection E, KSA 795101 through 5107 is referencing our taxed when tagged vehicles. So buses, motorcycles, passenger vehicles, or trucks, any of those that are tagged when taxed would qualify. The reference to 795118 through 5121 are the RV titled recreational vehicles, and that would include recreational vehicles, trailers, and trucks that may be, or buses that may fall in that category. And then also, it would include trucks that are what are considered tax roll vehicles, which are assessed under 793306D. County treasurers would monthly notify and provide documentation of the aggregate amount of credits that were being applied that in the prior month to the Secretary of Revenue. The bill would create the Vehicle Registration Property Tax Credit Fund that would be administered by the Department of Revenue. Monies would be transferred from the Budget Stabilization Fund to the Vehicle Registration Property Tax Credit Fund to pay for the credits. And the bill would take effect from and after publication in the Kansas Register, and I'd be happy to stand for questions.
Thank you, Amelia. Committee, Senator Starn.
Thank you, Madam Chair. Amelia, under the recreational vehicles as listed in bus, motorcycle, et cetera, does that include slide-in pickup campers?
I would have to check.
That's fine. We'll check on that and get back to you.
Thank you.
Seeing no other questions? Oh, Senator Schallenberger.
You're probably I don't know who's testifying, so let's just ask you. It's a simple bill, and I've read it now twice, and it's not soaking in. It's a one-time deal, right?
Madam Chair, correct.
And I can get, I have a car and I have taxes more than $250. I can apply for a property tax credit.
I believe it would be for these vehicles that qualify, it would be automatically credited at the level of the county treasurer's office, and they would get reimbursement then from the state for those credits.
County would get, I'm sorry.
I think the conferee will be able to
Okay,
answer
that's
these.
fine.
Yeah. So thank you, Amelia. Any other questions? Thank you. First is Senator Corson, and he brought the innovative idea to the committee. So welcome in a different perspective.
All right. Well, thank you, Madam Chair. Thank you so much for the opportunity to provide testimony. Thank you for having this hearing. As the chair mentioned, as far as I'm aware, this is a new idea and something that I'm excited to share with the committee. I brought this because I really think it's a common sense way to keep more money in the pockets of Kansans at a time of high cost. I think it's helpful because it's timely. It takes effect this year. It's broad-based. It affects most Kansans who pay property taxes, and it's time-limited, so it's not something that would go on indefinitely. To give you a sense of the scope, 3.1 million vehicles would qualify for this motor vehicle tax credit. Of those 3.1 million vehicles, this legislation would completely eliminate the vehicle registration property taxes on 2.5 million of them. So this would benefit more Kansans than a lot of other types of property tax relief than we're looking at. It's not just relief for homeowners or just relief for renters or just relief for seniors, although I think all of those things are meritorious and part of the larger effort to address the property tax issue. But I do think this is very broad-based. As one person said to me, if you go to an apartment complex, the parking lot is filled with cars. And so this is a way to reach a lot of Kansans. And it's real savings for Kansans. A family with 2 adults and 2 teenage drivers could save up to $1,000. And it eliminates or significantly reduces what I think we would all agree is one of the most hated taxes. I remember when our second son was born, my wife and I, we traded in our regular 4-door cars for slightly larger vehicles. And so you pay for the cost of the vehicle, then you pay that almost 10% sales tax. And then, of course, you pay for insurance on the vehicle. And that final step is registration. And at that point, it's paying that property tax that I think just really has a way of sticking in folks' craw. And the last couple points I want to be sure to make is that because the funds would come from the Budget Stabilization Fund, this bill would not impact the state general fund. And I want to be clear that this also does not impact the ability to lower the income tax rate pursuant to Senate Bill 269, which passed last session. Let me just address, if I could, Vice President Schallenberger's question of how this would work. It would work at the point of registration or renewal. So when you go in to either register a vehicle for the first time or to renew that vehicle, you would essentially start with a $250 non-refundable credit for that vehicle. So if your registration was $175, the property tax piece of it was $175, you would pay no property tax. You would still pay fees and other things, but you wouldn't pay that tax. You wouldn't get it's non-refundable, so you would not get a $75 check, but you would just not pay a property tax. If it was, say, $500, you would pay $250 in property tax because you would receive that $250 credit at the time of registration or renewal. Counties would then submit to revenue by the 10th of each month the amount of reimbursement they would be owed, which then would be paid to them from the Department of Revenue from funds that would be transferred out of the Budget Stabilization Fund. So let me stop there and answer any questions, Madam Chair.
Thank you, Senator. Any other questions, committee? Senator Clemp.
Thank you, Madam Chair, and thank you, Senator. So good. I had a couple questions. When you were having conversation, you mentioned there is out of the Budget Stabilization Fund, and it looks like it's about $313 million. Is that funding that's readily available? We can just pull that out of there, or how were those conversations? And are they going to speak today? So just educate me if you would.
Yeah, so the Budget Stabilization Fund, so the current balance as of February 3rd was $1.95 billion. We're generating a monthly interest of between $8 and $10 million. That could fluctuate, obviously, depending on changes in interest rates, but that's been pretty much what it has been now. So it would then be a transfer out of that stabilization fund into this newly created fund at the Department of Revenue, who then would make the reimbursements to the counties. So that's how that transfer would work, from stabilization fund to revenue, and then revenue to the counties based on what they submit by the 10th of each month.
Senator Clem.
Thank you, Madam Chair. So from that fund, it moves over. I'm wondering, can we just use the rest of it to buy down property tax?
So Senator, that fund, we'll discuss that fund at another time, but I'd rather use it to convert to CAPERS, a 401K plan, the Tier 3. But it is for the rainy day fund, and it also uses to buy down income tax.
Not making light of the bill. I like the bill, and anytime we're giving the taxpayers some funding back is a good thing. So I appreciate it.
And again, just to be just redundant, the balance would be more than enough that it would not affect the ability to lower income taxes pursuant to the legislation passed last year. So it retains a balance in the stabilization fund that would still allow income taxes to be lowered if the other criteria in the legislation were met.
That's correct. Senator Schallenberger.
Thank you. Thank you for, this is a creative idea. And so I've got 4 cars. I'm just trying to figure out how this works for me. I've got 4 cars. I think they all have a property tax of more than $250. So I could do this 4 times.
Madam Chair, Mr. Vice President, that's correct. It applies to each vehicle. So, so again, a family who has 2 adults and 2 teenagers driving would be able to use it for every vehicle. So you would have a savings, again, if they were, in your example, over $250 in the registration property tax, would save that family $1,000. So again, that's why I think this is timely, targeted, broad-based property tax relief for one of the most hated taxes that Kansans pay.
Thank you for that. Now, my recollection is when we had conversations about other tax policy, means testing was always something that you were interested in. So a gazillionaire would get the same 250 as grandma over here who's barely, you'd have no means testing in this.
That's right. I just think for the ease of administration, I think it made sense just to apply it across the board to every vehicle. I worry that it would just be asking a lot of the folks at these vehicle registration offices to be conducting essentially a means test. So again, I just thought it was easiest to just have it apply to every vehicle that's registered.
Thank you.
Thank you. Senator Francisco, then Senator Clem.
Thank you, Madam Chair, and thank you, Senator. What, have you had any opportunity to talk with county treasurers, and is this, do they see this as an additional burden or extra work?
Thank you, Madam Chair, Senator Francisco. I've not had those conversations. I would assume that this would be something relatively easy to implement, and for them, it's revenue neutral because they would get the money would be paid based on what they submit. So I would imagine that, I mean, the math is very simple. It is just taking $250 off of what you would normally pay in property taxes. So I would not expect a big administrative burden, and no one has reached out to me with that concern.
Senator Francisco.
Thank you. And then I understand that this is one time. Do you have an idea of what property taxes on vehicles, the average is? Again, would it make more sense to do this, you know, $100 at a time for 3 years and make it apply or help people again that might need that help more as opposed to a larger amount that's one time?
Madam Chair, Senator Francisco, I think that's something that could be explored. I was trying to just come up with something that is timely in that it starts very quickly during a time when so many Kansans are experiencing these high prices, would just keep money in people's pockets, and it would be easy to administer. It's just straightforward. It is not convoluted. So the average registration is under $250. So of the 3.1 million vehicles that are registered in Kansas every year, it is 2.5 million of them are under that 250. So for them, the property tax piece would be completely eliminated on that vehicle. And then there's 600,000 that are over 250 in vehicle registration property taxes.
Thank you. Senator Clem.
Thank you, Madam Chair. And you may have mentioned it when you were speaking, and to Senator Corson as well. So the funding that gets shifted over into the new account, that funding still gets credited to the formula from a buy down to get the amount on the property on the income tax?
Madam Chair, Senator Clem, no, it doesn't get credited, but the overall balance that would be remaining is still large enough that we would be able to lower income taxes if the other criteria were still met. So let me sort of walk through the way that it would work. So we have the current balance of 1.95 billion in the stabilization fund. We would transfer out the $313.4 million. That would then leave a balance in the stabilization fund of $1.636 billion. And if you look at our current estimates of revenue, according to Senate Bill 269 that we passed last session, to reduce income taxes, we would need to have a balance in the stabilization fund of $1.515 billion. So this would leave us with a more than $100 million cushion in the stabilization fund to make sure that we had enough in the stabilization fund that if the first criteria, which is the revenues collected exceeding the inflation adjusted amount for income taxes, if that was triggered, then it would also meet the second criteria, which is that balance in the stabilization fund, because 269 requires an ending balance in the stabilization fund of 15% of SGF in order to lower rates. And so this would keep us above that by, again, over $100 million, so quite some cushion. Because that was something I wanted to be sure of. So this would in no way impede the lowering of income taxes.
Thank you, Senator. Thank you, Madam Chair.
Thank you. Thank you, Senator, for your testimony.
Thank you. Thank you, Madam Chair, and thank you for having me.
Next is Whitney Damron. Welcome to the Tax Committee.
Thank you, Madam Chair, members of the committee. I'm Whitney Dameron, appearing on behalf of the Kansas Automobile Dealers Association. KADA President Don McNeely's in Las Vegas at the National Auto Dealers Association meeting, so couldn't be with us here today. Hannah Eubanks is here, though, to make sure I color between the lines. We appreciate Senator Corson bringing this before the committee. We have talked about the burden of property taxes on vehicles for a number of years, and we've talked about some different ideas time to time if people have come to us. The average new vehicle price now is approaching $50,000. That property tax bill is about $1,000 a year. As Senator Corson talked about in his testimony, if you look at a family, husband and wife probably have 2 vehicles. They have a child or 2. They might have a couple more. That bill comes once a year, all at the same time. Insurance bill comes at the same time as well for all the vehicles. A lot of people, contrast that with property taxes on property. If you have a mortgage, a lot of people pay that monthly with their escrow account. But again, the motor vehicle property tax comes at one time. You've got 45 days to pay it, to keep your tags, and keep moving down the road. We appreciate, what this committee is doing and what Senator Corson has done. If you go back to when Governor Bill Graves was in office, that's probably the last time we had substantial reduction in the property taxes on motor vehicles. Also coincides with the tenure of Senator Les Donovan from Wichita, a car dealer, who pushed that issue quite a bit. Some of the things they talked about at the time was the fact that the state of Kansas depreciates a vehicle very slowly on a new vehicle. You drive that car off the lot, and 2 weeks later, your trade-in value might be 20% less, but not to the state of Kansas. And that is artificially high for the first few years, which means you pay a higher property tax. Older vehicles pay a lower property tax, and that gets somewhat de minimis over time. But there is a direct correlation between the cost of purchasing and owning a vehicle and vehicle sales. And what we found during the Graves administration, when Kansas had literally one of the oldest fleets in the United States because of the property tax burden, that once that was relieved or made better, motor vehicle sales went up. And I know frequently in this committee, when you're looking to cut taxes, you're trying to figure out how to pay for it. Well, there is a pay for built into reducing property taxes on vehicles, and that's new vehicle sales, which generates sales tax for the state and local units of government. So with that, Madam Chair, members of the committee, I'm happy to stand for questions, but we appreciate your time on this issue.
So thank you, Whitney. Thank you for being brief. I know we got a couple other hearings, but I'm going to ask you a really tough question really quick.
Don's not here, so
If the legislature would have we could have completely wiped out property tax on vehicles versus the sales tax on non-prepared foods.
I think that's a decision for the legislature.
Okay.
I'm not taking
I was
food
just
out of people's
curious.
mouths. So
Okay, thank you, and thank you for your testimony.
Thank you.
Yes. Committee, we have Jake Miller online.
Madam Chair and committee, can you guys hear me okay?
Yes, and I hate to rush you, Jake. I'm sorry, we've got another hearing.
No, and I'm going to be super brief. I just wanted to thank you for allowing me to appear via Zoom. I had to make some changes, but I'm here on behalf of Ty Dragoo and SMART Transportation Division, who submitted testimony. I'm the executive director of the Working Kansas Alliance, and we would also like to join his testimony. Basically, we think this is a huge win for many of our members and our workers. Not everyone owns a home, but pretty much all of them own a vehicle, if not multiple. And so I think this gives a little bit more widespread property tax relief. I know you guys are short on time, so I'll leave it at that and just stand for any questions.
Well, thank you, Jake. It's nice to see you again. Any committee, any questions? Seeing none, thank you, Jake. Any other proponents? Opponents? Neutral. We'll close the hearing on Senate Bill 378, open the hearing on 368. Amelia, will you give us an overview?
Madam Chair, members of the committee, Senate Bill number 368 relates to income taxation and enacts the Healthcare Sharing Ministries Tax Deduction Act. It would provide a subtraction modification for certain qualified healthcare sharing expenses that are paid by a qualified individual and certain qualified healthcare shares received by a qualified individual, beginning with tax year 2027. Specifically, new Section 3 of the bill and Section 4, which amends KSA 7932-117, would provide a subtraction modification from a taxpayer's federal adjusted gross income for two things. One, qualified healthcare sharing expenses that are paid by a qualified individual taxpayer during the taxable year, to the extent those are not already subtracted from their federal adjusted gross income. And qualified healthcare shares received by a qualified individual that are used for medical expenses that is used for medical expenses, also, again, to the extent that those amounts are included in their federal adjusted gross income. And I'll give you a little bit of, that's kind of the speak of of the bill. But what you really need to know are the definitions and what we're talking about here. And the conferees probably can give a better explanation, but in the bill, the definitions include that a qualified individual is a resident of Kansas and a member of a healthcare sharing ministry for at least 1 month during the taxable year. There's also a definition of healthcare sharing ministry, which means a nonprofit organization that is exempt from federal income tax pursuant to Section 501c3 of the Internal Revenue Code that meets the other definitional requirements that you will find on page 1 of the bill, such as membership are members who share a common set of ethical or religious beliefs. They act as a facilitator among members who have financial or medical needs to be able to assist with those needs. And you can see that there's 1 through 6 there. When we talk about a qualified healthcare share received, that means an amount that a taxpayer receives as a member of the healthcare sharing ministry to assist with one of their medical expenses. And then the term qualified healthcare sharing expense means the amount that a qualified individual pays, the person who is providing the financial assistance, pays, and it could be a contribution for the sharing of medical expenses, and also that may include administrative fees of the ministry. And there may be a question about this. The second portion of the subtraction modification, that is a subtraction modification for the qualified healthcare shares received by a qualified individual that then they use to pay medical expenses. I think there may be a question of whether that is taxable income at the federal level. And so this would only come into play, this provision would only have an effect if that income, if those shares that they received are treated as income by the federal government. So so that money is included in their federal adjusted gross income. If it's not in their federal adjusted gross income, then that provision doesn't have any effect. And I'd be happy to stand for questions.
Thank you, Amelia. Committee, any questions? Seeing none, thank you. So first conferee is Senator Peck. Welcome in a different capacity. Today is the Senator's Day for tax bills. And while you're walking up there, Amelia had an answer for Senator Starnes on Senate Bill 378. That's fine. Oh, well, we can come back to it. Okay.
So, Madam Chair, Senator Starnes, you had asked a question on the previous bill relating to the slide-in campers that go into the back of a pickup truck. My understanding, looking at the Department of Revenue's personal property guide, generally those slide-in campers do not meet the definition of an RV, of a recreational vehicle that's defined in the statutes. So it would not apply to those slide-in campers that are not, don't meet the definition of recreational vehicle.
Thank you, Amelia. Thank you, Senator.
Certainly. Thank you, Madam Chairman and committee members. I appreciate the opportunity to appear before you today in support of SB 368. I have long thought some type of legislation like this should be introduced. I just never took the initiative to introduce such legislation. Providing Kansans who are members of a healthcare sharing ministry with the same tax benefits as individuals who pay health insurance premiums, to me, is a matter of fairness. Tamara and I, in our 48 years of marriage, have for many, many years, most of those years, been members of a healthcare sharing ministry. Briefly, because I understand this may be a totally new concept to some of you. It's very simple. A group of people who agree with the guidelines will help members of the group pay medical expenses. I really like the Samaritan Ministries is who I belong to. We are members of. I really like it because I choose the doctor. My doctor and I choose the treatment. I don't have to get prior approval from an insurance company, from a government entity. Yes, I'm 66. I'm old enough for Medicare, but I am not on Medicare. But as a healthcare sharing ministry, I also get generally a fairly significant discount on the cost of my medical coverage. That's a whole nother topic we could talk about, but we won't. I will then submit my bills to the office, the headquarters, and they will then send out notices to members, who the members then will send it to me. As it relates to tax treatment, it's not income to me. It's no different than if you have an automobile and you wreck the vehicle and the insurance company sends you a check and you do not replace the vehicle. Was that income to you? No, it was a loss to you. This is basically supposed to be even up. You do have a deductible, and it doesn't cover everything. I know that, but this is something that I choose to do, and I believe that we should have the same tax treatment as those who pay for health insurance. It is lower cost, and that's, you know me, cheap conservative. That's the reason that I'm a member of a healthcare sharing ministry, for one reason. But for other individuals, they cannot necessarily afford health insurance, so they go with a healthcare sharing ministry because it's lower cost and the freedoms to choose their doctors and their services. It keeps them from relying on government services because of the fact they can't afford these premiums. Why do I choose? Well, again, the coverage and benefits, I believe, are much better than insurance. I'm an insurance agent, and I know some in the insurance industry say, why in the world is you an insurance agent go with a healthcare sharing ministry? I just like the freedom. I just like the freedoms that I have. It's a matter of fairness. The fiscal note, by the way, I think as many fiscal notes we see up here, it's like, oh, really? That can't be correct. But I'll be happy to answer questions about the legislation or about healthcare sharing ministries. We do have a couple individuals, at least one who's an expert in that area. But again, it's a very simple concept. Don't make it complex. You have a need for medical care, you have the medical care, you get a bill from the medical provider at a discounted rate most times. You submit the bill to the ministry. Sometimes I have to pay it ahead of time, and then I submit the bill. And then the ministry will, the headquarters will then send out to others. I receive checks. I receive letters of encouragement. I have people praying for me, for my health need, for my family's health need, Tamara's health need, whomever. So it's a simple, but again, this legislation just is, to me, a matter of fairness for individuals who choose a healthcare sharing ministry over health insurance. Madam Chairman, I'll be happy to stand for questions at the appropriate time.
Thank you, Senator. Senator Schallenberger.
I always have questions. I'm fascinated by this, and it sounds interesting. Let's just make sure I understand. So off of your adjusted gross income, contributions made by members or you to this fund would be deductible.
Correct.
Come off adjusted they come off your income, so it's a deduction, not a credit.
It would be treated the same as your health insurance premiums.
Okay.
I don't pay a premium. I pay my money directly to an individual who had a need.
My premiums don't come off unless I file a long form.
Correct.
So would that be the same here? If you just use a standard deduction, can you still take this off of your?
No, my understanding is this legislation would just say healthcare sharing ministries are treated the same.
Same as
So if
insurance if you
it depends
file
on the
a-
individual as to if they file long or short form.
Okay, thank you. I'd like to I trust you, but.
No,
We're going to
verification
verify
would be
that,
good.
Senator.
Thank you very much.
Yeah, we're about out of time. We've got to get to the conferees today, but we will discuss this. It's an innovative concept. So thank you, Senator. Any other questions for Senator Pack? Seeing none, thank
I
you.
will add, Madam Chairman, that you said this is a new concept. It is new to a lot of people. However, healthcare sharing ministry has been around for some 30, 40, 50.
No, the idea of the tax deduction
Right.
is, yeah.
Thank you.
It's not been proposed to this committee, because I will ask more definition on Kansas residents too, but I think it's just if you're filing. But we'll do that before we work the bill, the legislation. So we have a couple of minutes. We have 2 conferees left for the proponents. Joel Noble, welcome to the Tax Committee.
Chair Tyson and members of the committee, thank you for having me today. My name is Joel Noble, and I'm from Peoria, Illinois, and I'm here representing Samaritan Ministries, one of the largest sharing ministries among the nearly 1 million Americans using healthcare sharing ministries. So over 30 years, Samaritan has been serving its members as we bear one another's burdens through healthcare sharing. And I've been blessed to have been serving with Samaritan in the healthcare sharing field for over 24 years. As has already been said, healthcare sharing is not insurance, but rather was formed to help meet the healthcare cost needs of members by sharing funds voluntarily among other members. However, these costs do not share any of the benefits of an insurance premium in the tax codes of 39 of the 41 states that have an income tax, Missouri and Indiana being the exception. So Kansans that have health insurance through their employer receive that as a tax-free benefit, and the employer can deduct 100% of those contributions as a business expense. For those that purchase health insurance from the marketplace and itemize on their return, those premiums are deductible, and that reduction in federal AGI flows through for Kansas tax returns. Self-employed individuals are able to deduct their health insurance premiums. And lastly, those with insurance are able to open and fund health savings accounts, which are tax sheltered. So none of these tax benefits are available to members of healthcare sharing ministries currently, because they don't have insurance. So we support Senate Bill 368, which will allow healthcare sharing members to deduct both the shares and the fees that they send other members on their Kansas tax returns. Nearly half of our members are below 200% of the poverty line. And so many of our members are in rural areas, and many of them would otherwise be using CanCare if they were not on healthcare sharing. And so the budget impact is going to be modest, but the message you'll send to the thousands of Kansans that are using healthcare sharing ministries will be huge. So I just ask that you support Senate Bill 368, and I'm available for any questions.
Thank you, Mr. Noble. Any questions, committee? Seeing none, thank you very much. Rebecca Schwartz, we have your written testimony. Would you like to give a quick statement? We do have one opponent that I need to get to.
Yes, I would be happy to make my statement. Are you able to hear me?
Yes.
Okay, may I begin?
Yes, I have less than a minute for you. I apologize, but we're about out of time.
That's all right. I'll just summarize. My name's Rebecca Schwartz. My husband Ryan and I are raising our 5 kids here in Kansas. We've chosen to use a health share to make our medical needs more affordable for our family. We've understood that this is not insurance, it's a nonprofit. It does not promise to pay every bill, but it does make our health needs more affordable for our family. And I just want to say that I support this bill.
Well, thank you, Rebecca. And we do have your written testimony, and thank you for sharing your story with us.
Thank you.
It's wonderful. Committee, we have one opponent, Laurel Birchfield. Welcome to the Tax Committee. And I apologize, Laurel, we just have a couple minutes left. But we do have your written testimony.
I understand. Thank you so much, Madam Chair and members of the committee. My name is Laurel Birchfield. I'm the Advocacy Director at Mainstream Coalition. We were founded over 30 years ago by faith-based and community leaders to protect church-state separation. You do have my written testimony, but there are a couple things I would like to highlight for you as far as our opposition to this bill. The first is that, as you have heard multiple times, healthcare sharing ministries are not health insurance. And so this is something that, in the spirit of the bill, I think we need to understand means that the benefits that go to those who are part of insurance, which are regulated, should not be applicable to those who participate in healthcare sharing ministries, because they are not equivalent. They are not the same thing. In fact, healthcare sharing ministries are stood up as a cost sharing, burden sharing opportunity for people, very much the same way that a GoFundMe, which is often used to cover healthcare expenses, is doing the same thing. And they also are not eligible for these kind of tax deductions. So I just would like to acknowledge that as we talk about freedom, as we talk about fairness, we are not actually talking about it in the fullest scope of what people are actually doing to cover their healthcare expenses. Further, healthcare sharing ministries are very discriminatory in the way that they accept members and how they distribute their payments. I won't go over, but I do cite examples from a common healthcare sharing ministry that operates in Kansas about what they require their members to do, including statements of faith and getting letters from their pastor saying that they are in fact attending the church. These discriminate against people who might want to participate if they do not meet these often Christian regulations and criteria. It also can discriminate against our queer community and anyone who lives a lifestyle outside of what the church deems appropriate. Third, and I do apologize for going so quickly, just want to acknowledge that because these are not regulated, they also do not have to report out, and I don't feel that the disclaimer of this bill is strong enough in requiring the reporting out of what is eligible and what they actually cover. In fact, I cite a study in Massachusetts in 22 found that only about half of all claims submitted by members were deemed eligible for payment. I do list again several items that are included in a common healthcare sharing ministry that are ineligible for payment. I encourage you to look at those because several of those are very common medical needs, and a lot of them are based on them not being required to cover pre-existing conditions. So in closing, Madam Chair, just in a time when Kansas residents desperately need affordable healthcare sharing ministries are not the answer. They are discriminatory. They do not actually meet the full needs of Kansas residents, and I encourage you, please do not pass this to equate these with health insurance in our state. Thank you.
Okay, thank you. Committee questions. I know it's quick, committee. If you want, we could bring it back and leave the hearing open. Seeing no requests for that, thank you. Are there any other proponents? Opponents? Neutral? We'll close the hearing on Senate Bill 368. Committee, as I said, we have 2 hearings next week on Tuesday, and we will work the legislation that we've previously heard the rest of the week. So it will be a very busy week, trying to finish up before turnaround. Any other business to be brought before the committee? Seeing none, we're adjourned.